Welcome everybody to the Integris national webinar here across. I think we have about 16 different states on this webinar today. I want to welcome everybody. This is Integris. We got Iconic IT that we've recently partnered with. We have Measured Insurance and we have Connectwise as well. Today, we're going to focus on the 4 steps for a successful cyber policy renewal. We've been getting a lot of feedback from our customer success team, from our sales team, from our BCIOs about cyber insurance renewals, the cyber insurance marketplace, and what's going on in that realm. So we wanted to bring in the best of class in cyber insurance, as well as the best in class in terms of technology providers to make sure we covered this topic for you. Quick housekeeping notes. This webinar is being recorded and will be distributed to all that register. We will be paying attention to the Q&A and chat during the entire presentation. We have the entire Integris and Iconic IT marketing team behind the scenes paying attention to that stuff. So please utilize it. You can drop your questions directly in there. I'll be paying attention to it as well to make sure I ask questions in line with the presentation. And with that being said, to make sure everything's working and to give our presenters some context, would you all mind just dropping in the chat where you're calling in from today? Where are you physically located in this remote virtual world that we now live in? And also, what industry are you a part of? So if you can hit us with your location and industry in the chat, we'd love to see that so the presenters can understand and hit on some of those hot topics. And then finally, for all that attended today and gave us your time, we wanted to send you all out a small thank you. So we'll be emailing over a Domino's gift card. Pizza is on Integris this week. So with that, I'm going to check out the chat real quick and see where we got. I'll read a couple of these off. We got Pennington, New Jersey in claims management, marketing and advertising, Marquette, Michigan in the banking space, financial services. We got Wichita with accounting and CPA firm, Duluth with a trucking company, New York City, real people casting for advertising. And I'll hit one more here, Denver with civil engineering. Thank you all for hitting us in the chat with those. I appreciate it. It gives Zach and Jay some perspective. With that, we'll get into the next slide here. Okay. All right, agenda. We're going to hit introductions. We're going to talk through the regulatory landscape, really what's the cause that's making this all happen right now in the cyber and tech space. For number 3, we're going to hit what's going on in cyber insurance. Zach's going to go into detail on exactly the differences. One of my favorite slides that you're going to see today is the difference between 2020, 2021, and 2022. And he's going to walk you through that, which I think is a very valuable piece of information. On number 4, we're going to hit cyber insurance renewal considerations. Then we're going to get into understanding cybersecurity risks and responsibilities. And then we'll wrap up, make sure we're getting after those questions. So with that, here's your panelists for today. We have Zach Atya. He is the Director of Insurance at Measured. Zach assists the organization in building innovative cyber insurance products, programs, and distribution strategies. His professional experience and academic background in cybersecurity management and policy helps him bridge the gap between cyber awareness, mitigation, and risk management. Zach, thanks for joining us today.
Thanks for having me.
Next up, we have Jay Ryerse. Jay is a CISSP and the VP of Global Security at Connectwise. In 2021 and 2022, he was named a channel chief by CRN. He's trained over 10,000 people, including myself and some of the team members at Integris, in the IT Nation Certify and other cybersecurity courses. He's an international speaker on cybersecurity and the impact of SMBs. And he's the author of Technology 101 for Business Owners. And you have myself, Jay, thank you for joining us. You also have myself, I'm Anthony DeGraw, I'm the VP of Sales at Integris. I actually have a unique perspective on this. It's not in my bio there, but I spent about the first 10 to 15 years of my career in the cyber insurance marketplace, working for carriers, managing general agents, as well as retail agents on specifically cyber insurance. I flipped over to the MSP side once I learned about that industry and now serve you all from that perspective. So real quick, I wanted to touch on or open this up really to Jay and myself, where Jay's going to touch on this and myself on really what is the why? What's the current problem that we're all dealing with? and why we have 145 people on this webinar today with cyber insurance and technology. It's clearly a very hot topic. So I just wanted to give the audience my perspective on that. And then I'm going to transfer that buck to Jay and Zach as well to just get an overall perspective. From the MSP side, like I mentioned, we're across 16 different locations now. We serve about 3 time zones. From our perspective, companies are getting asked to hold higher levels of cyber liability insurance, whether that is getting pushed on them from their clients they serve or industries they represent. And then what we see is when they're going to get those higher limits or renew even the current cyber insurance policy they have in place, they're getting significant increases in their premium, or they're even getting denied coverage for not having the right technology or compliance controls in place. And that's when they come and knock into us, and it becomes an immediate need, almost like an emergency to get something done. So that's the Integris perspective on why this was such a hot topic. Jay, I'll throw it over to you.
Well, again, thanks, Anthony, for having us today. The volume of attacks occurring today and then the amount of the impact that we're seeing on small businesses is exponential. And you start adding in some of the geopolitical issues going on, whether it be what's happening in Ukraine and the cyber attacks that they're suffering and what it would look like in the event that we engaged in that particular conflict. It's going to create challenges for every industry as the number of cyber attacks actually increase over the next several months. Insurance is one of the ways to mitigate that risk. And we are firm believers in not only having it, but obviously keeping your policies and aligning towards assessing risk when it comes to determining how much and what type of security insurance you actually need. I think Zach's probably best to cover that topic.
Yeah, the fact of the matter is, unfortunately, everyone, especially with the rise of ransomware, was caught blindsided by the rise of attacks, and that includes insurance carriers. And I'm willing to admit the industry had a bit of a knee-jerk reaction to the current state of the threat landscape. And that has caused a lot of issues with insurance renewals, getting new insurance. And unfortunately, insureds, all the folks that are on this call, have been drawn the short straw and haven't really been given much guidance. And so what I'm hoping to relate to you all and with the help of Jay and Anthony is to help provide a little bit more guidance and really partner with you guys to understand how you should be looking at the market as a whole. I'm not going to bore you to death with the details and dynamics of the cyber insurance market, but what I will do is try to hold your hand through and understand the way that the industry is thinking and use that insider knowledge to your guys' benefit so that you can be competitive and protected come your insurance renewal time or when you're seeking to purchase insurance.
Absolutely. I'll add in some final thoughts there from my perspective on both sides. 5 to 10 years ago, when I was on the insurance side, almost every insurance carrier was coming out with a specific cyber product, and all the language, all the terms, the limits of liability, the cost structure were all completely different. And what you had is typical supply and demand. Supply was through the roof. Every insurance carrier was looking at this as another opportunity to grow their business. And on the demand side, it was super low. Zach and Jay were going back and forth before we went live on 5% of the market has cyber insurance, 10% of the market has cyber insurance. So the demand is still very low. The supply was really high, which made, to Zach's point, there was some one-click applications out there to get cyber insurance in place. They weren't asking any questions. They weren't following up on any risk management strategies. And then what happened over the last 2 to 3 years, you had significant claims that came through, and now they're getting smarter about it, like they always do. With that, we're going to go into some of Jay's slides here. He's going to run through them for you all on what's the cause of this? What is the actual problem, the cause that is creating where we are today? So Jay, I'm going to turn it over to you.
Thanks. So if we look at it from the perspective of understanding your cybersecurity risks and responsibilities, who owns the responsibility is important. As I talk to business owners, all over the world, they all feel like in their business, they're too small. They're not going to be a victim because the attackers want the bigger enterprise quality businesses. And that's not really the case. So we think that we live in this perfect world with no traffic and no noise pollution. The kids are out playing until the streetlights come on. But in the cybersecurity space, that really isn't the case. And it became very evident this last year when President Biden rolled out an executive order focused on improving the nation's cybersecurity. Now, this particular document was targeted at federal government agencies and businesses that do business with the government. But in my mind, and what we're seeing out there is this is just the first of many steps towards pushing business owners, business leaders to secure their own data, which they have the responsibility to do. And so we start thinking about what does it mean and what does it look like? I think in the improved detection section, what we see there is that we've all been too slow to deploy. And so if I look at what the order said, if I take 34 pages and consolidate it down to 5 key bullets, I'm going to add my 6, which is before you do anything in security, you have to assess where you are. If you don't understand where your data resides, how it's accessed, how it's backed up, what security controls are in place, none of the other controls are going to matter. So we look at this from the executive order, basically said, you've got to have an incident response plan. Now, I'm pretty sure on the insurance questionnaires now, they're asking you if you have an IR plan. They want to see multi-factor authentication. They want to see endpoint detection and response, also known as EDR or maybe even MDR in your world. They want to see if you have SIM, security incident event management, which for the longest time was only an enterprise tool, but there are now solutions available for the SMB space and things you guys can be looking at. And of course, how would you survive a cyber attack? We call it backups, but the survivability factors can become very important. When we look at the hits that have happened over the years, I love pulling out some of the articles that you see out there. And this one's a little bit dated now because the number has gone up just a hair. But for small businesses, they've said that cyber attacks cost the business $200,000 on average. Now, I blocked out there putting many out of business because we're not really seeing them go out of business. We're just seeing them suffer through months of time and recovery efforts to get back to normal. As a matter of fact, the Panelist Institute says that it takes 66 days after a cyber attack occurs to get your business back to a normal operating condition. And so we have to be aware of what's going on and why it matters. And I'm guessing if we polled the audience, most of you have never, been part of a cyber attack, or maybe you didn't know you were. We talked about ransomware quite a bit. I know that it'll be a topic today. I actually brought a sample of a message that pops up on a screen. Now, I took it out of the text document, put it in here so it's actually readable. But basically, when a ransomware attack happens now, the attackers are putting up a marketing message or a sales letter. I don't know how you want to read it. They're basically saying, hey, as you figured out, we've broken into your network and we have all of your data. We've downloaded some of your data. We stole some of it. And yeah, we've gone ahead and we've encrypted everything. And when you start to see these messages pop up on your screen, what would your team do? Now, I know you guys are going to call Integris, you're going to call your insurance company, which is good. But these guys are getting aggressive. For this case, they actually talk about the good news is we're here to help. The attackers want to help you. They have high standards, high morals they have to maintain. So they will provide you with IT support by offering a decryption tool, a security report that will show you how they broke in, then show you how to actually avoid this in the future. And they'll do it for, in this case, in this particular client, a small $800,000. So if you go on to this next slide, you'll actually see that where they actually go back and say $800,000. And I love this one. There is no way that we will not fulfill our promises after you pay us. Like, really? Honor amongst thieves? And I'm making light of this, but it's a really big deal. These attackers are in businesses, in some cases, more than 150 days before they've been identified. So they've had time to steal your data, figure out who your company is. And we are seeing the average ransom payment today is 10% of companies' revenue. So if you're a $10 million a year business, you should expect a $1 million ransom. That really shows that we're not really prepared. That really nice neighborhood we lived in isn't so nice after all. So what are some of the financial losses and how else might we think about them? There's a lot of different ways, but when I look at this, I think about the cost per record. And I pulled some stats here from Panelist Institute and IBM, businesses with less than 500 employees. So enterprise is substantially worse. But if they're saying that the average cost of a breach is $2.98 million, by the time that you recover, restore, bring data back, pay the ransom, the recovery efforts, the legal fees, the other things that come with insurance, it becomes very expensive. And some of you are saying, but Jay, our business isn't even doing $3 million a year in revenue. That's okay. If I'm off by 90%, most of us are not prepared to take that kind of a hit into our cash flows. And that's really why I think insurance is so important. But how is it happening? Where are we seeing it on the cyber side? We're seeing emails, a business email compromise. So the FBI keeps putting these reports out there, and typically half of all cyber attacks are starting in and around email. And it's social engineering. They're getting users to click on things they shouldn't click on. In 2020, the average loss for business email compromise was $94,000. Next is ransomware. I showed you guys a quick sample of ransomware, but we're seeing this now somewhere between 11 and 14 seconds. A ransomware attack occurs on a business here in North America. That's too many. So we ultimately look at this as a team sport issue. We've got to work with you. We've got to work with Anthony's team and work with the insurance providers, a lot like Zach's company, help make sure you're prepared for a cyber attack. At the end of the day, we actually talk about this thing called data responsibility. And this is where I'll hand off to Zach to really dive into it. We call this data responsibility pie. And so everybody understands what their role is in managing and assessing risk. And it starts with the data owner owns the liability, and they establish the budget for protecting data. Right? At the end of the day, the business owners, the board of directors, whoever's in charge owns that responsibility. But they want to pass that responsibility over to the IT team. Right? They want information technology team to own that responsibility. The reality is that team's only going to implement the solutions that the data owner has budgeted for and approved. And lastly is this information security team, which most of you don't have. So you're going to look to your partners like Integris to solve this. This is really where the information technology team and the data owners work together to assess risk, determine what the mitigation strategies look like, implement those where it's appropriate, implement technology where appropriate, and of course, leverage insurance to help transfer risk. And so when you understand this pie, you start to think about cybersecurity and insurance very differently. And so I'm kind of curious, Zach, what do you think? Is this a good way to depict that message?
Yeah, absolutely. I tend to think about it as people, processes, technology, which is something I'll get into in a little bit. But all of those things are very much all the pieces to the pie. And when you look at a cyber insurance application, for example, that's pretty much what every cyber insurance application is trying to get in terms of information. When you're filling out those applications, all those elements that you just discussed, Jay, are part of that. So,
Zach, if I could quickly hit on some of Jay's points there, I'll start with the small side. Everybody thinks they're small when they're looking in the mirror, and the 10-person company thinks they're small, the 50-person, the 100, the 500, because everybody's comparing themselves to something larger. And my biggest standpoint on that is the larger organizations, the Targets of the world, when they had their breach, were spending $1 million on cyber technologies, and they didn't have the people team behind it to back up those technologies. So it doesn't matter where you're at. And even different than that, the budgets are different at each level of this as we understand it. So think through that as well. And if you don't have that budget there, or you don't have the capabilities of that larger team, you're actually an easier target. And it may make sense for them in a one-to-many type of situation for them to target an organization like yourself versus going after the Targets, the banks of the world, and things like that. So think through that. Another thing I wanted to touch on is Jay was talking about the cost of a breach, and I think 2.98 million was on there. There's another cost of that it's very hard to articulate an actual dollar amount, and that's the reputation cost of you're gonna have to announce this. Even if you don't announce it, it's gonna get out by your customers in one form or another. And I call that reputation hit that you will take from one of these incidents. And the best way I've been able to articulate it to folks is when Equifax was breached, they lost 20% of their market cap within 1 week of that breach. So obviously they're a multi-billion-dollar organization, and 20% is a very large number, but Jay was getting at this. Take that 20% number and attach it to where you're at today. And you can figure out what is that type of reputation hit going to do to your business organization going forward. Zach, sorry for interrupting you, man. I just want to get those two things in there.
Oh no, all great points. And those are all elements that are covered by a cyber insurance policy. So for those of you that are not familiar with what cyber insurance is, it's really a way for you to transfer the cost of a breach to an insurance company, very much like you would in a car accident with your car insurance. But it's a very comprehensive, robust insurance policy. I would argue it's one of the most comprehensive policies that exist for transferring any kind of risk. And that covers some of your first party breach response costs. It covers some of your third party liability costs if somebody is suing you for a breach in their privacy and private data, and regulatory damages. So if you're non-compliant with HIPAA, if you're in the healthcare industry, or if you accept credit cards and maintain credit card information, you'll have to be compliant with the payment card industry data security practices framework. There are fines and penalties associated with that. And then also theft of funds, cybercrime. That's also something else that's covered by cyber insurance. So at that, let's dive in to see what's really going on in the cyber insurance industry. If any of you guys have any questions on cyber insurance, Anthony will find a way for us to meet in the middle, and we can talk about those later on. So the good, the bad, and the ugly. This isn't a Western movie, although cyber insurance feels like the Wild West, and cybersecurity does feel like the Wild West. But cyber insurance carriers in the early days really, as Anthony actually talked about earlier, really were writing anything. They were handing out cyber insurance policies super cheap. In recent history, I saw a $5 million policy, a policy that is $5 million worth of coverage for less than 10 grand. And just to let you know, folks, those days are over. And so there's more robust underwriting. So they're looking at applications. Some organizations are even employing different types of scans to understand what the risk tolerance and your overall risk exposure is, which is a good thing, because what that does, it helps create a more stable pricing structure over the long term. I'm going to illustrate what those jumps are and what the failure of underwriting does to the insurance industry here in a second. But the other element is there's more support for insureds as a whole. Some cyber insurance companies are doing it better than others. Folks at Measured, we feel like we're doing that right. Hence our partnership with Integris, and by virtue of that, partnering with Connectwise. So really trying to serve as your risk management experts is the goal there. The bad thing is there's not enough cyber insurance to go around. So without getting too deep into the insurance technicalities, the insurers that are providing the coverage, there's not enough coverage for them to be able to deploy out to companies. So that's causing rates to go up, right? Supply and demand. And the other element and really the ugliest thing, is the claim severity and claim frequency. Both frequency and magnitude of claims is increasing. So quite frankly, that's really the biggest contributing factor to why pricing is increasing. So I did want to illustrate this, and hopefully this really puts it in the perspective of what's going on in terms of pricing year over year. So let's say all else is equal. And I use an example, a sector that is having a lot of trouble finding cyber insurance right now, law firms. A lot of them are getting non-renewed, and it's impossible for them to find coverage. So this is a client that we've actually seen, and we had some information about their past policies. So I put this together to help illustrate this. $18 million in revenue, true SMB, and same number of employees, same number of record. Let's say all else was equal in between these two applicants, right? The first applicant had no sort of endpoint protection, that's EPP, no training of their employees, and they had open RDP ports, which is the remote desktop protocol. Typically, it's meant for remote work. There's a variety of reasons why you could have this port open, but it's one of the biggest contributing factors for an open door for threat actors to get into your systems. In 2021, that was fine. They paid $12,000 for a $1 million limit. A lot of times actually even cheaper than that, to be quite honest. But in 2022, look what's happening. With no endpoint protection, they're getting declined. They don't have any training. There was an increase in premium, and some are also getting declined because of that reason. And then open RDP ports, you're declined. So that's really tough for them. So let's say that they at least had the EPP, or if they did manage to find coverage, they're seeing an increase of about almost 100%. Now let's look at applicant B. They're in a bit better spot, right? So their rates were lower because they had their endpoint protection in place. They had some training in place. And they didn't have any open RDP ports. They're a better posture, and the pricing reflects that. It's about $8,000 a year in 2021. Regardless, because of the market, and because even though they had a better posture, the entire cyber insurance market is reacting. So even though they did everything right, they're still seeing an increase, quite a big increase if you look at it. So regardless, they're paying about $14,000 instead of that $8,000. So I hope this illustrates a couple of things. One, the importance of having some bare minimum controls, not just for protection, but also how much you're coming out of pocket for an insurance policy, and hopefully being able to get an insurance policy. But also, unfortunately, all the people that did have good controls in place, they're picking up the tab for all the bad apples in there. So the bad apple spoils the bunch, and that's true of insurance. So the things to look for come renewal time, there's definitely a chance that your coverage will be restricted. That could be either the amount of limit that you're being granted. I see a lot of clients that had a $5 million limit policy in the past, and the max that their carrier is willing to offer them now, I've seen as low as 1 million. Actually, but typically the 5 is getting pushed down to a $3 million policy. Also increased deductibles. So in the event of a claim, the insurers want clients to have more skin in the game. And so in increasing the deductible, that means you're going to have to come out of pocket a little bit more in the event of a claim. In addition, it's not just the limits and the amount, but also the type of coverage that you're getting. I'm seeing sublimits for ransomware coverage, which is in the event of a ransomware breach, it's a limit that's dedicated to what were to happen in a ransomware claim, like paying the ransom, as an example. I've seen that instead of being full limits, maybe 50% limit. So if you had a $3 million policy, you have a maximum of 1.5 specifically for ransomware. And again, that's a reflection of the amount of ransomware claims and ransomware is not going anywhere. In fact, it's evolving. So there's a heightened sense of awareness for the controls that specifically address ransomware, right? So endpoint detection and response that Jay had mentioned earlier, that is shown to a shift from the model of what is called signature-based protection, where I'm sure everybody remembers the days of McAfee, and you're downloading, you got to manually download your updates, and you're just like, oh God, I got to wait 25 minutes for this thing to download. Those days are over. And so in shifting to endpoint detection and response, it's a much more dynamic way of protecting your business. And that is shown to be increasing the resilience of an organization. And then regulatory changes, and Jay highlighted that earlier with the executive order. We really saw a lot of that start in the EU with GDPR, and California followed shortly with what's called the CCPA. There's a bunch of other states. Virginia just recently passed theirs. And there's a pipeline of states now that are looking to pass legislation largely around privacy and maintaining the privacy of consumers. But I think very soon, as we saw with the executive order, there's going to be some mandates around cybersecurity controls as well.
One quick point on this too, when I was in the cyber insurance space, the number one thing I would do to separate one carrier from another is if you have that $1 million limit, I didn't want to see sublimits on there. And I want to make that very clear that what Zach is saying here is that you're probably not going to get that full limit that you're paying for across multiple different coverage parts. It's one thing that you would want to push for. It's things that you should be asking questions about or trying to increase those. I typically, now that I'm not in the insurance space, I can say this, whenever you see a sublimit, that means the insurance carrier is expecting a higher chance of loss in that category, and they want to limit their exposure. Same things as it comes to exclusions and things like that. When you're reading through your policy, you want to make sure you're very clear on what those exclusions are or the modifications to different language, because they are very smart individuals. They look at this very deeply. And if they're putting it there, it's for a specific reason, which means you should better protect yourself there. Hey, I can't transfer this piece of risk to them. How can I better transfer this risk or get ahead of this risk somewhere else?
Yep. All great points. So it can be pretty stressful come renewal time for your cyber insurance policy these days. And is it possible for you to insulate yourself from all of this? Shake the Magic 8 Ball, all sources point to yes, but also not really. And as evidence from what I had illustrated with that applicant B who had the good controls, unfortunately, their pricing is still increasing because the industry as a whole is increasing their pricing. So let's jump in and discuss that a little bit in terms of getting to the 4 things in terms of how you can prepare for that cyber renewal. You know, how to prepare yourself, assess. Jay is a big proponent for assessment. It's music to my ears when he starts talking about assessing your risk and assessing your exposure. Doing the actual mitigation, so partnering with Integris and Connectwise to ensure that you're taking those steps to limit the potential for a loss. And then transferring that risk to insurance. And we'll dive into each one of these a little bit more. So in terms of preparation, I break these into two phases. Phase one is prior to even thinking about your getting insurance quotes, filling out an application. It's really great. And by the way, this is just a good practice in general, regardless if you have cyber insurance, or staying in touch with your IT department. They've been sitting at the kids' table for a long time, and now they're starting to join the grown-ups at an increasingly rapid pace. So get in touch with any internal IT personnel that you may have now, or get in touch with the Integrises of the world, your technology service providers, on any changes that have occurred, because Integris is working very hard throughout the course of their services and throughout the year, making changes, making sure that you're up to date. Get in contact with them about some of the changes that are being made and what that means for your business and how it protects your business. So inventory your assets. So hardware, software, shadow IT is a big problem. Shadow IT is basically the ability for an employee to download Spotify on their company issued laptops. That's not okay. Your employees should not be able to do that. It's any sort of IT actions that are being taken without the IT department actually knowing. What security technologies are being used, if there may have been changes or upgrades to the technologies that you're using. And then the types and amounts of first and third party data that you're handling. So first party data, an example of that would be your employees' information, right? For HR reasons. And an example of third party information would be maybe intellectual property that you have that for another organization, or any of your clients, right? So if you're a retail business, any information that you might have on your clients, or if you're healthcare, any of your patient data, that's all third party information. And then phase two is translating what you have from phase one into the application. And just because you have an application and a lot of them are yes, no questions, it would behoove you to also create some context in addition to that application. So provide a summary to your cyber insurance providers and tell that story as to why you would be a good risk to take on some of those changes. So some of the things that you can't necessarily see in an application is this client really taking security seriously? And are they optimizing as opposed to being reactive? Having that summary is incredibly helpful. And Anthony, I'm sure you could probably speak on both sides of this, but maybe you want to touch on that a little bit.
Absolutely. One of the hardest parts about being in the insurance space and what Zach and his team have to do from an underwriting perspective is truly assess an entire business from a piece of paper and primarily yes, no questions with whole number answers. How many people do you have? 50. How much revenue do you have? 5 million. Do you do this? Yes. Or sometimes you get an NA on there as well. When you're bringing your organization to an insurance carrier, and this isn't just for cyber, this could be for general liability, workers' compensation, all of these, you want to tell a story. You want to tell them and that underwriter through supplemental information, applications, whatever the case may be, your story. What are you all doing? And just by being proactive in that manner is going to get you brownie points on the back end, because they're going to feel like they truly understand or know who you are, and then you actually put the effort into doing this. So I don't know how many brownie points you're actually going to get from Zach's team, but I understand you'll get something, and you'll separate yourself from the pack of everything else they're getting. On our side of the business, I've been seeing more and more of these where our customers are coming to us and saying, hey, I just got my cyber insurance renewal. A lot of these questions are more technical. Can you walk through them with me? And in that aspect, we've been able to provide more detailed answers, because a lot of times you're not able to provide those answers. You have something in place, but you don't know the specific details behind it. We're able to assist with providing those detailed answers to make you look like a well-rounded risk that the insurance company actually wants to insure.
Yeah. And Jay, I'm sure Connectwise makes improvements over the hood or under the hood over the course of the year. So even communicating with you guys and understanding, even though they buy a certain solution from you guys, even just year over year, I'm sure there's improvements and security improvements for the clients that they should understand, right?
Yeah, and it's not even just year over year. It's what we're seeing, changes every 45 days right at this point. And while we don't work directly with the SMB community, our entire business model is built around supporting companies like Integris, and then the capabilities that allow them to do a lot with very little. Security is a place where we're all working very close together, because there's so much more to it than just, hey, I need to download a new version of QuickBooks. I've got a lot more to look at today than we ever had to. And so many people believe that the cloud is more secure. Well, the cloud is just somebody else's computer. We should call it what it is. And so you as the data owner on this call need to take responsibility to understand where that data resides, how it's backed up, how it's secured. I can't tell you how many times that the business owners that we've talked to after a breach believed that their cloud was secure, but didn't know what questions to even ask. I think that insurance is really driving the change in those conversations. Working with Anthony and the team at Integris, you get that visibility you haven't had before. And I guess I'm going to answer live really fast. Lori came in and said, are Apple products more secure? Sorry, Lori, they're not. There was a belief that they were less compromised because early on there weren't as many Apple products out there as there were Microsoft products. But at this point, anything that plugs into a network and has flashy lights is at risk. That could be your copiers, it could be your wireless connections, could be for your own devices, could be a variety of different technologies out there. And so the assessment will help you understand what the risk is, so that when you get to your insurance renewals and you're having these conversations, you're approaching it with information and knowledge, as opposed to hoping that what you heard on the internet is true.
Yeah, that's a good point. And also, it's not like you're deeply ingrained into the Apple ecosystem from start to finish. Eventually, you're going to hit a Linux server or a Windows server or an Azure cloud infrastructure. So just because you have the Apple computer, maybe on device, marginally more secure, but overall you're still connected. We live in a connected world. So
on that point, we're actually seeing a lot of organizations that are increasing their complexity and they don't even know it. Meaning we got users that want to live on Macs and Google, and we got other users that want to live on Microsoft and Windows. And it is completing what I call a split brain syndrome. How you are creating an almost nightmare with no standardization in place for your internal team or your external team, because now we need to protect all this data over here. We need to protect all this data over here. And the solutions to do those things are usually different. So standardization and part of our assessment process in Integris is touching on that hardware, software, lifecycle management, standardization, and why is it important? Somebody mentioned it, like you're almost creating more complexity, and you're not just living usually on those things. And those things like iPads and phones and all these tablets are getting more and more powerful. They hold more and more data. They have more and more ability to access your company systems. And so when I see that going on, it concerns me greatly that we're all over the place. And now we actually don't know where our data is, or you got a lot of what Zach mentioned, shadow IT going on.
And it looks like, I'm not sure if maybe the text got cut off of the slide, but really in terms of assessment, you should take a holistic approach when it comes to assessing your risk. So not just your risk and exposure, but there we go, assessing your security posture and taking a look at your security budget. That's something that you should be reviewing on a fairly consistent basis. So assess how much you can spend and how much you're going to be able to fit within that pool. The security threats that you're facing. So as an example, this is a piece of our dashboard that all of our insureds have. And we help to contextualize what these risks mean and through a dollar amount. So this particular client, there's the average cost of breach for them based on the risk that we've assessed and scanned for would be around $53,000. And it's a snapshot over time. So we do see the maximum liability, right? So there's a chance, be a 1 in 4, 1 in 10 chance that they may have to come out of pocket 1.6 million. I believe this was a small client, around $1 million in revenue. So $1 million of revenue and their maximum limit of liability is 1.6, almost 1.7. That can't be good. And then really just, I mentioned this earlier, people, processes, and technology. I like to call the people, and most people in the security industry call it the human firewall. What are you doing to not just, actually, Jay had talked about the owner, the security owner earlier. Really, what are you doing to make sure that everybody owns security, right? You're only secure as your weakest link. And so there are ways, typically through training, that you can make everyone a champion for security, not just one person. You still need that one person, don't get me wrong, but do what you can for everybody in your organization. Processes, the incident response plan is a good example, making sure that you have processes in place, whether that's dual authorization on wire transfers, or if it's being able to pick up the phone and call when you receive an invoice and ensure that invoice is correct and that the banking information is correct from the vendor that you receive it from. Just good hygiene. That's what it's about. And then technology, obviously. You can't just buy something and think that it's going to work. They need to actually be configured properly. So any existing security tools that you have, make sure they're properly configured, and then having an open conversation with Integris or your technology partners about, are there technologies that can address additional risks?
2 points on the technology side. We have a saying in our organization that the firewall is only as good as the person who set it up. And a lot of times we see the SMB, even the mid-market community buying the fancy best solution out there. And then when you go and assess the configuration of it, it's wide open. That's a firewall example, but it exists across a lot of these technology solutions. And then down below, we lead with gap analysis, right? Where are you at today? Where do you need, what does best in class look like? What are those gaps? And then how do you fill those gaps? Sometimes it's a technology, sometimes it's a training, sometimes it's policies and procedures. And there's a lot of times that there's free things that you can implement to get things moving in the right direction.
Yep. And real quick, go out and get your insurance. I feel like it was a pretty good guide to get you all started on having successful renewal. The one thing I would bear in mind is insurance is meant to address residual risk, right? So you took those mitigating steps, and insurance for a long time, especially cyber insurance, was a one size fits all, right? Blanket coverage at all the same limits. But the fact of the matter is there are companies that aren't subject to PCI. So do you really need that coverage? So having a true partner to help you understand what your actual residual risk is and how to transfer that to a cyber insurance policy that works the best for your business specifically, that's extremely important. And then there are a few items here, like ensuring that you have full limits for ransomware. There's a lot of insurers that are cutting back those limits, as I had mentioned. Business interruption, there's a such thing as a waiting period. How long is it going to be until the insurer starts paying out for your business to be down? So it could be 48 hours, could be 12 hours. At Measured, we have a 0-hour waiting period. So when you start losing business, that's the second that we start trying to pay you back for that lost revenue. And then cybercrime, making sure that you have coverage for a phishing attack when your organization is duped into sending money where they shouldn't, and the theft of funds.
I like to say, to finalize the insurance conversation and the importance of it, is we can only get you to about 95% secure. Doesn't matter how big your budget is or getting all the right technologies or best in class things there. There's still the human element of this. And that's where that risk transfer comes into place. And Jay, we're going to finalize with you. I think we have 2 or 3 more slides to go real quick.
Yeah, it's where do we start? What do I do now that I've heard all this information? And we've already talked about the need for people, process, and technology, but we haven't talked about how they come together, because there are some gaps that you find. And I use this chart to help you identify what happens if you only have some people, some process, some technology applied. Obviously, if you've got none of the above, you've got no defense. But if you've only got people, but no process and technology, you can't execute. If you've got process, but no people and technology, you're wasting your time. Process with nothing to help implement doesn't do any good. If you only have technology, it becomes shelfware. Anthony, I was laughing at your firewall scenario where it's not configured correctly. But for those on the call, we were talking about McAfee earlier. Remember back when we'd buy a new computer and it came with antivirus? Maybe it was 90 days, or maybe you got a year, and then it expired. I can't tell you how many times I'd meet with a client who suffered through a cyber attack, or even before they did, and their antivirus had been expired for 326 days. That becomes shelfware if it's just technology. Now, when you put people and process together, that's really good, but you can't scale. Technology is designed to allow us to do more with less, all said and done. People and technology, you're very inconsistent. Your processes aren't defined, so no one knows what they're trying to do, what they're supposed to be accomplishing. If you've only got process and technology, the people won't adopt it. So you've got to make sure you're working with your teams, and Integris can help you with this, to make sure you've got people, process, and technology in place to help protect yourself against cyber attacks. And if you've got that, when it's time for your renewal, I'm pretty sure Zach's gonna be like, this is a great client for us to work with. So Anthony, what do you think about this?
Yeah, man, I love this slide. This is the first time I'm seeing it from Jay, and I've attended a lot of Jay's in-persons and virtual things. From my perspective, this is a great one. And to finalize there, if you put the people, process, and technology in place, you're going to get insurance from Zach, and you're also going to get premium rates, and you're going to be a long-term partner with your insurance carrier. So if you can get all those. So with that ends the slides and presentations here. We have Q&A. We got 4 or 5 questions in the chat in the Q&A section. We also have them in the chat. What I'm going to do right now is I'm going to stop the share, and I'm going to ask the Integris marketing team, the Iconic IT marketing team, if they can assist with a poll. We're also going to throw out a poll to all of you. So hopefully they can assist me with that in the background. There it is. Look at that. So if you all wouldn't mind taking 1 minute to just quickly answer this poll for us. That way, after this, we can follow up with the most valuable resources to all of you. I'm going to minimize this on my screen, and I'm going to get some questions going to Zach and Jay on my side. Scroll up to the top here. All right, we got Paul asked, is there a basic form of cyber insurance, the equivalent of a liability insurance for smaller companies or companies with a tight IT budget?
I would say so. Like I said, there's some bare minimums that all companies, no matter their size, should have in terms of security controls. And in terms of a bare minimum, a cyber insurance policy is meant to be a holistic approach to risk management. So I would probably encourage that maybe you look at a lower limit because of the size of your company, as opposed to limiting the types of coverages that are included in the cyber policy.
Yeah, I would 100% agree. I think if you're in that situation, Paul, or others where you have a limited IT budget and budget for cyber insurance, I think that's where it's a key conversation between your insurance partner as well as your IT partner, and having that joint conversation of, all right, this is the overall budget I have. I like to say everybody has a different budget. Every time we walk into a different conversation, businesses, nonprofits, everybody has a different budget. How can we best utilize that budget to get you the risk transfer to insurance and the technology tool sets from Jay's company and Integris? And definitely lowering the limits of liability. I think if you're going from $1 million to 500,000 to 100,000, that's going to assist greatly because you're limiting the exposure to the insurance company. Jay answered Lori's question here in the chat, so we'll keep it moving. We got Brian's question. How much should SMBs expect to spend monthly/per seat for core cybersecurity technical controls like EPP, training, and et cetera? Brian, I hope you answered the poll. Our Integris team can reach out to you from our local region that is surrounding you, and we can talk through that. We're very transparent about our pricing. Jay's team is transparent with us on our pricing. We can get you very specific answers on, here's a layered security approach, and here's what each solution looks like. This is what you currently have. This is what so please reach out to on us. That's definitely a conversation we can help answer very quick.
And Anthony, that assessment is so important. So Brian, you shouldn't spend any money on cybersecurity until you've assessed to understand where your risk is. Once you understand what your risk is, then you can look at how do you mitigate, and then what's going to require technology and or other solutions to solve for. So that's why there's not a one size fits all number to that question.
Such a good answer, because there's so many times we come in and assess businesses and they think they need the latest and greatest technology, or somebody just emailed about a new solution and like their backups aren't even running today, or they have local admin rights on all their computers. Like some very basic stuff can be done to increase your cybersecurity posture without having to spend money. Let's keep it moving here. We got 5 more minutes. We're panelists going to address questions. Reed, so I saw your questions in the Q&A. I'm just getting them from 2 different angles. Give me 1 second. I know they were a little lengthy in the Q&A. I'll make sure I get to it. Great session. Thank you. I can't see the full name. It looks like Angelica. What about coverage from non-admitted carriers? Is that worth having?
Yeah, absolutely. For a couple of reasons. Non-admitted carriers provide a level of flexibility that the quote unquote admitted markets don't typically have. The one thing to pay attention for with a non-admitted product is the financial rating of the company that you are purchasing the coverage from. Because they're not being supported by the insurance departments of the states and they're not regulated in the same fashion that the admitted policies are, it's paramount to ensure that the company would be able to sustain a large number of losses and still be able to be solvent enough to be able to pay out the claims should they arise.
Absolutely. And I've seen carriers have both admitted and non-admitted forms, and they can work off both. And based on your risk profile, you may have to go to their non-admitted form because it's not approved in your specific state. Is the trend for cyber insurance going to have all users having MFA set up and not just admins and VPN users? I'm not even going to go to Zach on that question. I'm just going to say yes. Elizabeth, hypothetically speaking, all processes discussed today in place, hacker attempts to get in. With all of these systems in place, do they try another avenue or typically move on because the squeeze may not be worth the juice? Jay, I'll throw that one over to you.
Yeah, I actually answered and said that what we are seeing, the trends in our security operations center has got 160 people in it worldwide. We see them move on to the next target. They're playing the volume game, trying to cast a wide net and get as many victims as they can. So unless there's a very specific business case where someone's paying them to go after a specific named company, it's usually a hit and connect or move on.
Absolutely. Yeah. That specific use case would be like, I see intellectual property a lot of times. Hey, you're a manufacturer, you have a specific process or technologies in place. You own that IP to deliver the car you're making, let's call it. And they want to take that IP and go do it for cheaper elsewhere. That's where I see that specific use case where they're going to try a little bit harder.
Yeah, the perfect example of that is Coca-Cola. The amount of cyber attacks where people are trying to get Coca-Cola's formulas is unbelievable. You look back and scratch your head and say, I can't believe that people care this much about it, but someone just wants the bragging rights for it. So it's why people hack is a whole separate webinar we can do.
It looks like, Jay, you answered Ruben as well, and I want to make sure I get to Reed's question. Reed, real quick, in the chat asked, what is admitted, non-admitted carrier policy? Zach, I've been out of the game for a little longer. I'm going to let you take that one real quick from the top.
Sure. So an admitted product is one that's regulated by the states, to put it simply. And should an insurer end up becoming insolvent, the state will come in and pay those claims up to a certain amount on the carrier's behalf. So there is sort of a sense of security there, but also those products tend to evolve a little bit more slowly than the non-admitted products because they have to file and go through very lengthy, painful bureaucratic processes in filing with each and every state. It's not like there's like a national Department of Insurance and they just go there and it funnels out to the states. It's just if there's any insurance agents on the phone, you have to get licensed in every state. You have to go to every state individually to refile your policy to submit for new coverages. And that could take years sometimes. So a non-admitted policy is helpful. And that's why I go back to the financial rating, is because those policies adopt much more quickly and adapt to the changing threat landscape more quickly. Pricing is more flexible as well. And so just check out that financial rating on the non-admitted product and you'll be in good shape.
Absolutely. So we are at 2:00. Reed, specifically, I just reached out to you. You had questions about MSAs and them being specifically targeted for larger organizations with limits to liabilities and stuff. I actually have specific work that I've done in that space of helping smaller consulting firms and stuff when working with like a Bank of America or a large company negotiate down those limits of liabilities based on their actual risk profile and the data and access that they've been given. So reach out to me directly. I shot you my email. With that, I'm going to finalize here. I want to be respectful of everybody's time. Once again, be on the lookout for two things in your email. Number one, Domino's Pizza gift card. Pizza's on Integris this week. And then number two, we will also follow up with a quick survey. If you can ask or provide feedback on additional topics you would like us to hear. We could go deeper on insurance and our partnership with Measured. We can go deeper on the technology solutions and the SOC team that Jay and his team have built out. We're happy to go in any direction, and we'll see you next quarter. With that, Zach, Jay, thank you so much for spending time with us today.
Thank you.
Thank you.